Hello friends, it's Arnaud Delapierre. Today we're going to dissect a method that often makes people dream, trading like an investment fund. We know that all these institutions manage astronomical sums and adopt very structured approaches. In this video, I will give you the keys to reproduce their vision and mechanism even with more modest capital. My goal is to help you progress and, above all, understand how these strategies work. Stay until the end because we will examine some often overlooked points. And above all, subscribe and like the video to support the channel. Funds are often distinguished by rigorous discipline and a long-term vision. In the mind of an institutional investor, each position is planned with precision. It's not about gambling on a stroke of luck, but about building a robust and diversified portfolio. They use sophisticated technical and fundamental tools while following very strict money management rules. This rigor is often makes the difference between a mere gamble and a truly accomplished approacher. In this video, I will share with you some concrete elements drawn from these institutional case studies so that you can be inspired and then might be adapting your strategy with what institutional funds do. To begin, a fund often takes into account a general market context. It examines the economic situation, interest rates, monetary policy, and even certain global trends to assess their position. It does not rely only on technical signals, but also integrates fundamental data into their process. This approach makes it possible to better understand the overall dynamics and adapt their strategy to various changes. It requires a certain amount of analysis time, and that is where you can make the difference. By investing in learning and understanding macro parameters, you will gain clarity on the direction to take. Now, before delving into our strategies, I would like to tell you about an app that can really simplify your life. It's Notrade. It is available on iOS and Android, completely free, and it offers very precise trading signals for trading and scalping. Its interface is clear and you can receive real-time alerts so you never miss an opportunity. It is an excellent ally for anyone looking to save time in their strategy and analysis and to analyze faster. If you're looking for a flexible and reliable solution, consider trying Notrade. I use it myself to refine my timing and my positions. Now, let's talk about a central aspect. Risk management. A fund does not take positions on a whim. It allocates a specific percentage of a capital to each opportunity, always with a preservation goal. For imitate this rigor, set an amount you are willing to lose before entering a position. Use a stop loss adapted to your plan and make sure your gain-loss ratio is consistent. The idea is to never jeopardize your capital, of course. This discipline is the foundation of professional trading and will save you from many scares in the long run. Another common practice among institutional giants, strategic diversification. They don't bet everything on a single asset class or one sector. On the contrary, they distribute their capital across multiple markets, even different geographic areas, to spread risks and capture various trends. For you, this might mean combining stock strategy, forex, and even options if you feel capable, of course. By doing so, you smooth out fluctuations and increase your chances of success. This methodical distribution is often underestimated by individuals, even though it can really stabilize a portfolio. Funds also rely on a mix of technical and fundamental analysis. The goal is to identify opportunities with potential by considering the economic climate as well as price patterns. In technique, they do not limit themselves to RSI or moving averages. They sometimes examine rarer indicators like the MACD in modified histogram, order flow, or even the depth of market. On the fundamental side, economic publications, company results, and even central bank behavior are part of the picture. This analytical combination gives more solidity to their decision. It's also important to know that a fund does not make decisions on instinct. It relies on quantified, compiled, and verified data. They frequently use statistical processing software to filter out noise and identify reliable trends. Institutional traders, they even go so far as to incorporate market sentiment through media flow or social network analysis. It's quite difficult to decrypt, but it can be done. Of course, you don't need an overpriced infrastructure to do the same thing, but you will work with proven indicators and reliable data. I think it remains an asset. Your decisions will gain in objectivity and maturity. Psychological discipline is also a pillar among the giants. They are aware that emotion can be very costly if not controlled. That is why adhering to the plan, the ability to meet a goal, and serenity in execution are crucial. A fund does not act on a whim of heed, but according to an internally validated protocol. For you, this means managing stress, accepting that a loss is part of the journey, and following your rules without giving in to fear or euphoria. It is this consistency that makes, I think, that a professional trader worthy of the name is capable of winning in the markets. In a fund, no one works alone in there. Breaking, the team analyzes, confronts ideas, and establishes a collective validation. This collaboration helps identify blind spots and ensures a more robust. For an independent trader, it might be wise to share analysis with a circle of trust or to participate in a community of experienced traders. Why not Notrade? Simply presenting your plan to someone else can help you spot inconsistencies. This sharing dynamic is sometimes underestimated, even though it enhances the quality of each position. Another notable point, the management of financial leverage. Funds use them, but with caution and within the confines of their risk constraints. Too many individual traders get carried away by leverage and end up losing everything on a whimsical trade. Bad luck. The important thing is to calibrate your exposure. If you want to use leverage, do so taking into account your loss tolerances. It's better to accept earning a little less, but staying alive in the market rather than risking the total annihilation of your capital. Measure is always your best ally. A fund also cultivates a network of solid contacts. It regularly exchanges with economists, analysts, and other institutions to cross perspectives. This wealth of information gives them a certain advantage that's undeniable for adjusting their strategy. For an individual, annual networking can mean attending conferences, participating in webinars, or even just interacting on quality forums. You're never isolated. If you actively create these points of contact with other enthusiasts, feedback from seasoned traders can save you precious time and help you avoid mistakes too. Costly mistakes. The performance of a fund is evaluated over the long term, not just on one trade or a spectacular month. They look at consistency, portfolio volatility, and regularity of results. This comprehensive view allows them to assess if a strategy is on track or needs adjustment. For you, it might mean regularly tracking each transaction, identifying your strengths and weaknesses, and adjusting your plan accordingly. Patience is an asset, even if it may seem frustrating. It's by observing all your results that you will progress. Really, the market moves constantly and a fund adapts continuously. It can reallocate its positions in a few hours if new economic demands arise. This flexibility is essential to remain efficient as trends can change quickly. For an independent trader, it is important to regularly review their roadmap. Keep an eye on macroeconomic releases, follow sector cycles, and adjust your exposure based on new signals. Inaction is often the worst enemy in the stock market. The ability to move while remaining consistent with these principles makes all the difference. Here we are reaching the end of this video. You now know the main approaches used by funds to manage their portfolio. Far from being out of reach, these methods can very well adapt to your daily trading if you show method and discipline. I hope this video has given you some concrete tips to refine your own strategy. Do not hesitate to subscribe to the channel, like and share your feedback in the comments. It is always a pleasure to engage with you. Keep learning, stay curious, and never forget that consistency is your best card for success in this field.